and welcome. And it is indeed a pleasant morning for the Indian markets because the trade deal has been finally through, because India and US agrees on the trade deal, and that's indeed the big positive news that we are starting our day with. From 50% that was announced and slapped earlier, this now comes down to 18%, and a whole host of sectors, they are expected to once again get back into the life, from textiles to ITs to pharma, autos, and lots more. The list is long, but yes, of course, it comes on certain conditions. But along with that, the leaders, Trump as well as Prime Minister Modi, both of them congratulated each other and definitely paved the way for the deal that has been finally through. Because do remember that it just didn't start from the month of April to June, and finally that 50% level is what we have seen hitting from August, and it was indeed a month of negotiations that were there once this trade deal was announced. And surprisingly, it came late evening, but yes, the Indian markets and even the gift nifty was roaring on the back of this stellar news. So I think that the whole day is going to be just this, that this deal, what does it mean for the Indian markets, and a whole host of sectors that will get impacted, because it will not just help boost the confidence of the FIIs, how will it lend support to the rupee, something that we'll try to decode. But lots more to talk about. And firstly, let me take it across to ET Now and ET Now Swadesh Senior Executive Editor Sajith Mangat, who is now with us onto the show. And Sajith, what a pleasant surprise, 18%. And it's indeed one of the lowest level for any South Asian country as per se.
True. If you look at the entire deal from the tariff point of view, it's 18%, and 18% is better than 50, but it's slightly higher than the baseline tariff of 10%, which was initially imposed. So, but 18%, if you, as you said, it compares lower to some of the South Asian countries like Vietnam or Taiwan or ASEAN countries which have tariff between 19 to 20% there. There is also one more kicker which comes into play here is the foreign currency depreciation, which has happened over the last few months of around 6 to 7%. So effectively, for an exporter which is now going to sell its goods to the US, the net impact could be as low as 12% or so, and that's manageable from our point of view, because you are still going to be competitive against many of the Asian peers there. But from a market's point of view, yeah, the deal is done. The uncertainty which was there in the India-US trade deal and the frequent banter about additional tariffs and everything has now been resolved. US has claimed that India will stop buying Russian crude. We haven't said anything on the Russian crude part of it, but our understanding is that we will increase our crude sourcing from US and Venezuela, and that's something which is very important from a point of view. Our trade between India and US is around 80 to 90 billion dollars. Now, what US has said very clearly that they're going to India is going to buy goods worth $500 billion, and that's possible over a period of next 5 to 7 years, because what we are seeing is that there are certain opportunities which are coming from India for that purchases, and that could be in the form of crude, where we can be buying around 5 to 10 billion dollars on a yearly basis from US and Venezuela. There is defense and aerospace where we do source a lot of defense from US. There is civilian aircraft which we have a deal with Boeing, and many of the Indian airliners have huge orders pending with Boeing. So that trade also marks is part of that $500 billion that comes in there. We have recently given impetus for data center infrastructure, the chips, high-end chips, everything that is required for AI computing. All that would be bought from some of the US companies there. And then you have nuclear energy, where we're trying to bring in smaller nuclear reactors, for which technology can again come in from there. So aside of this, from India's point of view, it gives certainty with respect to the tariff for all exports to the US, especially big relief for textiles, leather, gems and jewellery, and many of the export labor-intensive export sectors which were impacted by the high 50% tariff there. I need to put in context here, because for many of the exporters, January, Feb is a month when the orders start filling in for the summer season in the US. And if and this deal comes at the right time where they can pitch in or their rates for that order, and now they will be competitive and they can compete with many of the Asian peers to fill those orders. So the export contraction that we saw between India and US in 2025, that would be back with Indian exporters again pushing more orders into the US at a lower tariff as compared to 50% earlier.
Indeed. Thank you so much, Ajit, for really highlighting all the sectors that you need to be watching out for. But we will definitely try to get more sense all throughout the day, because that's where the action will be. But in an exclusive conversation with Group Editor-in-Chief Navika Kumar, US Ambassador to India Sergio Gore congratulated both Prime Minister Modi and President Trump on the historic trade agreement. He expressed optimism about the future of India-US relations and confirmed that both leaders are expected to meet soon. Listen in.
Congratulations on the good news, both to the United States and India. Look, the reason this happened is because the president considers Prime Minister Modi a true friend. And since I've arrived in India, I have said that he considers him a dear friend. That is something that has been built upon many years. And so that is what brought us ultimately here today, is their personal relationship. The Prime Minister leadership, the President's leadership, it's something that is unique in the world because they are friends. I've said many times that, the potential between our two nations is limitless. And I think what you saw happening today unlocks the next chapter of great relationships between our two nations.
The question on everybody's mind is what happens to the penalty tariff. Would you have details of some of those announcements, and when can we expect the details of the trade deal to be put out?
The final number will be 18. And so the final number all in, once, there's a few things that will happen over the next few days, but overall, the final number will be 18. The bottom line is the secondary tariffs that were the 25% applied based on purchases of Russian oil. It's a reason the president applied those across multiple nations, and the reason being is because we want to bring peace to Ukraine and Russia. And so that is something the Prime Minister agrees with. The Prime Minister cares about peace also. And so overall, we have seen a reduction in oil by India, which is a great thing. It's nothing personal, but it's one of those things. We do not believe that we should be funding wars. So overall, the number will be 18.
That was the conversation with Navika and the US Ambassador Sergio Gore. We are now joining us Anurag Singh, Managing Partner, Ansett Capital. Anurag, hi, morning. The big uncertainty with respect to India and US trade, it seems now it's over, or do we need to see more of a fine print before we take a decision on whether the deal is good or bad?
Yeah, Sajid, I would wait for the fine print also, because of the overall 80 billion roughly that India exported to US, about 40 to 50 was anyways exempted, right? This included Apple phones and semiconductor and pharma. So that's the stuff that US needed was anyways broadly exempted, right? It was the remaining discretionary 30, 40, which was more, discretionary purchase where US could afford to levy tariff. Likewise, India imports about 50, so deficit of 40 was the question. Well, we'll see how it gets bridged, but I'm sure now I don't know what the details of the 500 billion is. I'm sure it's like maybe 50 billion for 10 years. So that's the 500 billion, right? Usually because US budgets in 10-year terms, right? So when they say we have saved this much, it's for 10 years cumulative. So my sense is around 50 billion per year of purchases India might have agreed, which kind of balances the trade exactly, right? Broadly. So that's my sense, but I would look at the devil in the detail. But let's celebrate the good news, Sajid. The good part is the agencies like WTO, UN, all of these agencies are losing relevance in this fast dynamic world, We need countries to do bilateral deals. And I think India was initially lagging behind, but now it has come back to the fore. Last 1 month with the deals with EU and US now proves that India is able to navigate through this uncertain environment, right? So it is all good news. I think it helps the market for the time being, and it helps the overall sentiment, which was gradually, at least from the foreign investors' perspective, gradually turning negative. That why is India just unable to move forward with any kind of a deal? That's my quick take, Sanjeev.
Anurag, if you look at from a market's point of view, the immediate impact would be for some of the export facing sectors, leather, jewellery, textiles. These are some of the sectors which were majorly impacted by the 50% tariff. And because this entire deal comes into effect immediately, there is a now a little bit of hope for these companies to show revival in earnings for in an immediate term. I know we need to get the final details of the entire deal, and that will come over a period of next few weeks or months. But for immediate purpose, it's a big relief for some of the export-facing sectors.
No, it definitely is. However, I think if we get stuck into some of these gems, jewelry, garments, farm, then we'll be losing the big picture. Sajid, the big picture was that countries need to do bilateral deals, and the countries which are able to negotiate those deals will move ahead. It's not what is happening today. It is the potential that we have to look at. India is, it's, roughly about what, 200 billion is the IT industry, right? Services were anyways exempted. But gradually they will be, people were talking about it that there might be restrictions around services, although US gains an advantage over there from India, so why would it do that? But the whole idea is that countries should be able to do this negotiation and be smart enough to figure this out, that you can't leave European Union and United States out of the picture and then strike deals with the rest of the globe, right? That doesn't mean anything. So in that sense it is important. Unfortunate part was, and if you carefully notice, all the big players were exempted. Unfortunately, only the unorganized smaller players were hurt in this deal, right? Because bigger players have lobbyists and on both sides, right? Here, even Apple was very, very clearly exempted right from the start, right? So similarly, I think in India, I think the lesson is that you should have bigger player in every industry, because then they are able to negotiate with the government and on both sides, right? And that really brings the international trade up. Smaller players will perish because they are not able to effectively, one, either lobby. Second, I don't think their products are not, I mean, they are easily irreplaceable by some other country, right? So that aside, I think I would not look, competitiveness of a country count. So in terms of garments and other stuff, I think we are at par with Bangladesh, Pakistan, Indonesia, and all that, right? So competitiveness count. At least we don't have a disadvantage now. But I'm looking at this whole bigger opportunity. If these two leaders have struck a deal, sitting in US, I would want to see India closer to US than a China or a Russia, right? Past 6 months, the message was that that's not the case, but let's see how things change now. That is the bigger message. Whether you are a friend of US or not a friend of US. Sajid, that's how I see it.
Anurag, hi, morning. Good to be speaking with you. So does it completely undo and more than make up for Sunday's damage, Anurag? The shock after the STT hike?
Yeah. By the way, Aisha, I listened to those interviews you have been conducting. They're pretty high class, right? So kudos to you on that, right? I think that's the new series you've started, right? So pretty solid. So no, I think it would boost up the sentiment, right? Because on Sunday we almost got a message that FIIs, nobody cares about you guys. Like it's all fine. You can sell what you want to, right? But yeah, as I said, I think of the Indian market has been standing because of the domestic flows, right? And that confidence was beginning to shatter a bit, right? And I think it is just at the right time we have struck these two deals. European Union deals will take a year to ratify. Even here we'll see some deals, but the message is it will put a stopgap that, hey, India is ready, we can do the deal. So the focus now will move to the regular stuff in the market. There will not be any overhang. We'll come back to what is the earning, what is the growth, GDP growth is 10%. So I think that stress element is out, and hopefully I think we've taken the absorption that we have. We might take another 4 or 5 months over there, or who knows, we might rise to the next level. But there are no black clouds, as I see. So that's the bigger sentiment boost in terms of markets, right? And yeah, hopefully we should touch all-time highs today. All fingers crossed. Yeah.
Yeah, completely, touch wood to that. But what do you then add up to in terms of positions?
So positions, I will continue to add up to these private banks, healthcare. Well, I'll not add up to hospitals at these prices, but I'll continue to hold for longer period of time. I will try and look at some of these, these occasional plays of these, garments, chemicals, gems, jewelry, if there are minor players. But outside of that, I think I would start adding on to consumer discretionary. I think with the government, even though the budget doesn't signify that, I think government has realized that it needs to put an impetus on consumption because consumption is lagging. So I think I would try and figure out all that consumer discretionary plays wherever possible, especially on the higher end premium side, right? And then, as usual, I've missed the rally on defense and all of that, and I'll continue to avoid that. They are still too expensive. But things are in play now, right? You can't in a secular manner, you can't say market is expensive. You can try and pick your place, right? Even in the mid and small cap, right? But yeah, things are on from here on.
Thanks, Anurag, for joining us today and giving your perspective. We have now